Hey, it's Terry, and welcome to another episode of Invest Roundup. The US had an eventful week when Trump supporters broke into Capitol last Wednesday amidst the certification of President Joe Biden's victory by Congress. This incident, however, had little to no impact on the stock market as the major US indexes all closed at record highs on Thursday. The Dow Jones Industrial Average increased by 0.7%, the S&P 500 rose by 1.5%, and the Nasdaq Composite jumped 2.6%. EV stocks continue to rally, and we're seeing more and more car manufacturers joining the EV club. Streaming platforms continue to thrive because the world is practically still in lockdown. And some people got seriously ticked off at WhatsApp, Elon Musk included. Let's get into this week's news. Disclaimer. Whatever stock or news we talk about is not a recommendation to buy or to sell. These are all just news we deem important, things we think you need to know about if you're invested in the stock market or if you intend to invest. First news item, we find out who's the new winner of the streaming war in the US. You know how people are always saying Netflix and chill? Well, that term might be changing soon because analysts have recently announced the winner of the so-called streaming wars in the US. And newsflash, it's not Netflix. The winner goes by the name of Roku. And these guys do a few things. They make and sell hardware digital media players, which also goes by the same brand name. And then, these devices will allow users to access streaming services. But that's not why they're taking off right now. No. The potential big money lies in all the advertising and subscription for the platform, which means the more subscribers they have, the more brands and other big channels would want to be on the platform, which means more content, which would then attract even more subscribers. If that makes sense. Yeah. Roku beat the market index last Thursday when their share price went up by 8.6%, while the S&P 500 index was up only 1.4%. In fact, Roku stock has soared almost 200% in the past 12 months. In terms of performance, the company said they've ended 2020 with 51.2 million active accounts, which is 5 million more from the end of September. 5 million users in just 3 months. And overall, in year 2020 alone, they've got 14 million more active accounts because, well, everyone is locked inside. The number of active users is expected to grow further this year for two main reasons. One, because Roku had recently signed new deals to feature HBO Max and Peacock on its platform. And number two, because they recently bought the rights to an entire library of content from a now defunct streaming platform called Quibi. For those who've never heard of Quibi, the TLDR is they were a short video platform meant to appeal to commuters. Their videos feature A-list celebrities in short episodes less than 10 minutes long. Sadly though, the entire project fell through, mainly due to the pandemic. The platform had shut down and the content they created never saw daylight. Until now. According to Roku, this content from Quibi will be made available for free on the Roku channel, which offers shows and films with advertisements. Analysts are now also anticipating Discovery Channel to join in with their Discovery Plus app. Sounds like there's about to be a party up there. Hey Netflix, looks like these guys are ready to rock you. Get it? Roku, rock you? Okay, never mind, let's get it on. Second news item, there's now an electric car fit for Ken Miles. We know, EV again. But seriously, this is too cool not to share. We all know the industry leaders that's been dominating the electric car space lately, Tesla, XPeng, NIO. But we might need to roll out the red carpet now because a veteran car manufacturer is making a comeback soon. Ford, with its iconic Mustang brand, is about to roll out an all-electric sporty crossover in 3 driving modes, each with more aggressive acceleration than the last. It's none other than the Ford Mach-E. If you watch the movie Ford vs Ferrari, you probably feel like a modern Ken Miles driving this. This model has started shipping late in 2020 and analysts who test drove the car loved what they saw. At the moment, some experts are already optimistic that the company will successfully turn around under their new CEO Jim Farley and that his leadership will result in lower costs and more streamlined vehicle processes. But that being said, this optimism does not seem to show up in Ford's share price. The stock dropped 0.6% last week while Tesla shares jumped 7.8%. Still, we could be speaking prematurely because it could be a matter of time before Ford joins the popular EV kits in the stock market. And if that's not a good enough reason for Tesla to worry, get this. You know who else is building electric cars right now? Apple. Yeah, no right, these guys are everywhere. Now, I need to emphasize that it is just speculation at this point, but as of last week, shares of Korean manufacturer Hyundai Motors jumped 19.4% because there have been rumors that they'll be doing a tie-up with Apple to develop a self-driving electric vehicle. If this rumor proves to be true, this could actually be a windfall for them. Because let's face it, if veteran car manufacturers are to continue with their traditional business model, they are going to face headwinds. Pretty soon, EVs will be dominating the roads, so if they don't adapt, they're out. On the other hand though, if traditional automakers start building desirable electric vehicles themselves, this could pose a considerable threat to big EV names like Tesla and NIO. Yeah, I can see you sitting on the toilet, on the sofa, not subscribed. What are you waiting for? Hit that subscribe button already if you want to stay updated with the latest market news. Now, where was I? Third and final news item, we talk about a mix-up caused by Elon Musk's mixed signals. You ever just walk down the street and tens of millions of dollars rain on you? Yeah, me neither. But that's what happened to a company called Signal Advance last week. If you saw our episode last week, you would know that Facebook has big plans to turn WhatsApp into a shopping platform in 2021. In fact, they've even rolled out their updated privacy policy recently, which has triggered a wave of unhappiness across the globe, and one of the people that got ticked off was none other than the world's richest man, Elon Musk. So Elon, being an influential man he is, went on Twitter to start rallying people to move to Signal, another messaging platform run by a non-profit organization. His tweet, however, was a little cryptic with just two words: use Signal. And that tweet sent very excited investors to start buying into Signal Advance, a company that has no affiliation whatsoever with the messaging platform. How excited are we talking? Well, let's just say the company's share price went up from just 60 cents to $7.19. That's almost 1,100% increase in just a few days. In fact, as we're speaking, its share price is still shooting through the roof. Signal Advance is a small tech company based in Texas which focuses on healthcare and industrial applications, and the stock is traded over the counter, also known as OTC. With Elon Musk's tweet, however, the share suddenly surged 527% the first day and then another 91% on Friday. And in case you're wondering what happened to the actual Signal messaging app, the non-profit group behind the app looked like they had a good laugh over the whole incident and shared a tweet about it, even citing that our only investment is in your privacy. They do, however, have a new problem now, because according to them, so many new people are trying to join and they're now facing technical issues. Lesson learned: you have a 280 character limit on Twitter, better use it well. So those are the three important investment news we had to share with you this week. Once again, we encourage you to get more information if you'd like to act on any of the companies you shared about earlier. Comment below and tell us what you'd like to see on Invest Roundup, and share this video with your friends, especially those who are vested in the stock market. We'll see you next week!